Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right then, it's time to have a look at Tesla. We've gone all around the top 5 in the S&P 500. We've come back to have a look at Tesla. And it's been a few weeks. And I just want a quick message to my Patreon subscribers. You will be getting this video as an early access, as you always do with all my YouTube videos. But it will be a little bit late in the day. It's 20 past 5 now GMT time, and unfortunately my internet's been down most of the day, so I just haven't been able to get this video done. I normally aim to get a video out to the Discord, as you know, normally around midday, and that gives you a full 24 hours with it. Now you won't get that obviously in this case, but you'll still get it before YouTube gets it, so apologies for the delay, but better late than never. So anyway, we're going to focus in more on the shorter time frame and the count off of the recent low in a little while, but I thought we'd start with the long-term count here first with a little mix of Elliott wave and some classical analysis as well. So let's just remove that for a moment. If I just bring up my cycle wave degree channel I've got here, and I just want to bring up the wave 4 log retracement. So essentially what I think is going on, just to keep it super simple, is we've had a wave 1 into a wave 2 here. I'm saying this is cycle degree. This is a 714 day correction, so it's pretty significant. 1 into 2 here, then we've had a strong 3 up into here with an overthrow or a throw over in the 3 of the channel, which is quite typical, and then we've come back to the edge of the channel for 4, which has also brought us straight back to the 38.2% retracement, which is a typical wave 4 retracement, and now we've come out of here in a 1. So have we already done a 2 and now we're going to be off in a 3, or are we still in some kind of correction? And that's essentially what we're going to have a look at in here, is if we've got a zigzag coming on before we're done. I think either's possible, but I feel that we've most likely bottomed in the meantime with this correction down here in December 22. We were considering the possibility of this extending deeper in the prior video, but we did point out that it was likely the bottom here. But if we did come back again, then we would roll over before invalidating the count, because we were assuming there was a 5-wave structure down here, right? So 1, 2, 3, 4 can't come back into 1. We've now come all the way back up here, so you know it looks far more likely that that was the low. So that's the longer term count. If we look on our indicators for a moment, come back to the weekly time frame. On the OBV here, we've got a break of this downward trend and almost a return back to the highs of the all-time high. We're just off them in the OBV here, so really strong accumulation of bullish volume here to support this breakout. We can see that quite clearly here with 1, 2, 3, 4, 5, 6 green bars here in the volume, and we can see that the move off of the low did have a very significant push from volume as well for a wave 1. We would expect that to increase in aggressiveness within a wave 3, but we have to remember that as price increases significantly, volume tends to trend down overall, because it's easier to trade a high volume of a much cheaper stock than it is to trade high volume of a much more expensive stock. But still, a strong push from volume off of the low, and we can see back into neutral territory in the RSI, and that's after doing a trip from overbought all the way down into oversold on the weekly time frame, which often signifies the completion of a larger wave degree, going from overbought to oversold on the weekly. Still below the zero bound on the MACD here on the weekly time frame, but nice strong record here in the histogram. We've still got a sequence of high, if we look at it here, we've got a sequence of high, low, lower high, lower low, lower high, lower low. Still a lower high for the moment, but if we come back above the zero bound here on the weekly time frame after maybe a brief correction, we would have broken that sequence of weakness, of declining momentum, just as we would have here in the RSI as well. If we do get higher readings in the RSI, we'd break that sequence. So we're looking to follow the OBV higher basically with our momentum indicators, and for price to seek out new highs over the coming months and years. That's essentially the long-term view. Okay, you can also see how we came back roughly to the 250-day weekly exponential moving average. Well, weekly average, because we're on the weekly chart. Now, if we come down to the day time frame for a moment, we can see that we've now come back through the 60 EMA. We've got a gap below us, which I'm not necessarily too concerned about. I think that if we fill it now, that would be preferable to having to come back to fill it later. but I'd probably like to see that damage repaired in a zigzag down would be my preference. I've got a couple of alerts on the chart here in case the price comes back to me a little bit lower, but we came through the 60 and back tested it and bounced again, still below the 250, which is now trending down on the daily time frame. Now if we bring up the FRVPs here and we bring up we got any recorded gaps here, a couple of bigger gaps in the chart, go back a long way. I'm not really thinking about them at the moment, to be absolutely honest with you. I think that if we are coming up in a larger wave 5 into a cycle 1 or super cycle 1, then all of that could get filled much later into the future, but that's a problem for another day. Either way, for the moment, if we look at our fixed range volume profiles here, we look at our demand zones and support levels, we can see how essentially the trading ever since that low back in May 19 has been really quite thin in comparison to this long period. We can see in the visual range volume profile here, we can see how thick that trading is, and how everything since has been really quite thin on the ground in comparison. But we did come back into this little demand zone here, which we've labelled. We can see here on the volume profile here, and here. There are gaps in the volume profile below that. Okay, like I said, which did kind of support the bearish case that we might want to come down and repair more damage in the chart. But like I said, there'll be an opportunity to do that at a larger wave degree in the future. Things always correct bigger until we get into that sequence of wave 3s, and if we're only saying 5 into 1, then we've still got a pretty significant corrections to come over the years to come. So right, so now that we've done that, let's come in and just have a look at the Elliott wave count itself, bring that on. There's also another bullish count where we can look at this as the top of cycle wave 1. I would expect that could still be a wave 2, because it is essentially a 70% decline. If I remember, it's 75%, which is definitely sufficient. And on the linear golden zone retracement, if we just switch the chart off of log, we can see that we actually came to the 78.6% retracement. So this is plenty deep enough to be a wave 2 as well as a wave 4. We're measuring it in log primarily because the skew in price is so extreme. It is phenomenal. We went from the low of this wave to the top of this wave was a 3,385.42% increase. So I think there's a justification for looking at it in log to make up for some of that skew, but it could still be a 1 into a 2, right, which is extremely bullish, because now we're going into arguably a 3 of a 3. But anyway, let's bring up the primary count. Let's zoom in on the more recent price data here. Like I said, look at that volume ramping up off of its low. That's pretty strong. I'm just going to put that gap in here to record on the chart. Put that in the gaps folder. Save it. And then if we look at our indicators here on the daily time frame, we can see how leading into this low we got some pretty significant divergence, right? Bullish divergence at the lows here between these closing prices. The ABV was actually the most convincing this time rather than the RSI or the MACD. Strong bullish divergence between these lows here, and we saw it on the MACD as well. So we knew we were likely going to get a rally as volume was ramping up into the low, continued as we've rallied off of the low. So let's bring up our short-term count. Okay, let's come off of log now and come and have a look at this. Come down to the 4 hour, and we'll turn the moving averages off. We'll get this volume off the bottom now, clear up the chart a bit. So from this move so far, if I just bring that down to the very bottom, we haven't quite made it to the 50% retracement. Now this leaves me a little suspicious. Okay, it could be a shallower wave 2. It goes beyond the 38.2, which is a typical wave 4 target, right? Doesn't quite make it to the 50 of a golden zone, so it's a little on the shallow side, but that's fine. We get the occasional shallow 2. So for the moment, I'm going to say that's a wave 2 in. Okay, and now we're going 1, whether this is 1 2 1 2 out of here, okay, into a 3. Now it could be 3 waves and we're about to come down again, in which case we'll come deeper. So you know, it's really, you could look at it one way or the other at the moment. I think I would like it to come down lower, being absolutely honest. I want to see that gap filled, which is right on the 61.8. It's just a perfect territory to come back into, to fix this damage, get a deeper 2 and then get moving again higher. So we may be doing that. I mean, we've got a bit of a sell off today, so I might need to rejig this count. I got this as a single WXY, but it's difficult because I'd like to get this down as a 5. You know, down in 5, back in 3, down in 5, and just have a simple zigzag, but it doesn't look like that's what it's going to give us. So getting up off the low in this single move here, 1 2 1 2 1 2 3 4 3 4 3 4 5, wave 3 extension here into the wave 1. That looks pretty simple, and that looks, you know, pretty legit. Correction coming back, that looks okay as well. If we look at it in time frame, we stop right between the 50 and the 61.8, right in the high probability zone for a wave 2. I mean, I'd argue that anywhere between the 150 and the 2618 are likely zones to bottom. You could probably tighten that up to the 50 to the 2, which 2 equals 100% of the length of the impulse. Okay, so it'd be 2 lengths essentially, and this is the golden zone, 61.8% the length of the wave 1, and then all the way out to the 2618, which is 1.618 times the length of this impulse. Of all the possible places to bottom. Now, I don't tend to use fib type that much. I'm using it a bit more now because I do find that wave 2 can come in as early as the 23.6, can come in even later than the 2618. So I don't think it's the most reliable thing, but it bottomed there nonetheless, and around the 50 didn't quite make it. So let's come down lower now, so even smaller time frame, and we'll just turn that off for the moment and consider what we can see here. Okay, think about what we can see. Let's come down to the 30 for a minute. So we can get in here 5 quite easily, 3 and 5 again. So that looks like a single zigzag, doesn't it? So we can say that is 1 to here. That's 5. We can say that as 1, or we can say that's A, B, C to here. Okay, we can then see a 3 wave move back into another high. Let's just turn the candles off for a minute. So this is why I've gone WXY, because that looks like a single move, that looks like a flat, that looks like a single move. So W here, X here, Y here, one zigzag into another zigzag, a DZZ, a double zigzag joined by a flat in the X wave. From there we've come out, and it's just a question now of whether we've got a singular impulse on the go here, right, or whether we've got some kind of extension going on. In the strictest sense, it looks like 3 waves. Okay, it looks like that, which definitely has more of a corrective feel. So the question becomes, you know, have we got a WXY into a W, a zigzag into an X, and then something else? So it's just a very complicated correction. Zigzags within zigzags. Can we get down here in an impulse, though, is the question. So let's say we take the same idea and we say, alright, well, this is 1 2 3 4 5, then we go A, B, C somehow. Seems a bit tricky. I don't want to go 1 2 3 4, as I don't think there's a very good relationship, but I can go A, B, C, A to here, A, B, C, B to here, then I can go 1 2 3 4 5 for a C to here, for a flat with a flat within it, if you see what I'm saying, as that subwave degree. Then we've got to get down here in 5, so 1 2 3 4 5 into 3 into 4 into 5. You can argue that there is an impulse at subwave degree within the 3, but it looks a little peculiar. It's not a very nice fit. Let's just make sure that the wave 3 isn't too short. So here's the length of the wave 1. Shorter than the 1, is it shorter than the 5? Right, it's longer than the 5 at sub-minute degree. So you can legally get it in there. Not a very nice fit, no, is it? I think it looks better as a series of zigzags. Move off of the low. I mean, you could argue that you've got 1, 2, 3. Can we get 4 and 5? That would be truncated. Don't like the look of that. Can we get 4 and 5 to here? And then this is a correction. I think we probably can. Okay, but once again, that's not particularly pretty either. And this is just the way it is at the moment. You know, I mean, we're looking, if this is a completed wave up here, looking for a completion of 1 back into 2 somewhere around the 50 of a 61.8, and then moving higher again. So yeah, I'm not 100% convinced either way, to be absolutely honest with you at the moment. I wish I could be, I wish it was a bit clearer, but it's not. So the best we can do at the moment is say, alright, that's a wave 1, arguably. Let's tidy it up a bit. And now we're coming back in a wave 2. Doesn't look like it's done yet. And our invalidation point will be here. 163.94. It's actually 92. Let's just correct that. Okay, so we're looking for something to complete in here, somewhere between preferably the 50 and the 61.8. And then once we get a reaction out of there, you know, once we break that downward trend, okay, let's just reduce the extension on the line here. So we're coming down in the channel, and then once we get something back out of here, out of this reaction zone, out of this 50 to 61.8, and we see a resumption of the prior trend, there's a prior trend, and we get 1, 2, 3, 4, 5 on a smaller time frame, 2 back within this internal. This becomes an internal move of this pivot here. Once it's in, then we can resume our long and get back into it and keep going higher, or we can add to a position. We don't want to just start catching a falling knife. We don't know if this is going to make new lows or not. So on that note, we've got invalidation at 163.92. Move back below this. This counts wrong. It's not 1 into 2. 2 is still on the way and looking to come down deeper as a larger move to fulfill and repair the damage done to the chart, like this, where we can fill this gap up, get between the 50 and the 61.8, and then we can look for a move off of the low here to get long off of. But there is the possibility, I've seen it many times in many tech stocks, short, sharp and shallow corrections, if that makes sense. So just have to be aware now. If we get if this is 5 up and we get 3 back, we get a continuation of that trend, that could well lead us onto new highs. Alright then, that is my primary count. That's how I see things for the moment. I'm working on a bearish count, but I have to be honest, it's quite difficult after a 77% decline and such a strong rally off of the low, supported by momentum, supported by volume. It's pretty difficult to get this to continue to go down. Okay, so I might have something for you next time we come back round. That could well be a month or so away. I don't know how long it's going to take me. Hopefully not as long as last time, but for the moment the count is bullish. I'm not sure we've completed the correction yet, but I think the low was in January 23, and I think we're now moving up in a new series of waves higher. So alright then guys, that's all I've got for you on Tesla. Thank you very much for joining me. If you're new to the channel and like what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below, and as always, a huge thank you to my Patreon subscribers. Your support is greatly appreciated, and I'll be back with you guys as soon as I can. I'll be announcing a live stream shortly as well, hopefully. So all the best, take care, be back with you soon, bye bye.